You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little show we like to call around these parts the option block. A little bit of options wit, some wisdom, some analysis, a whole bunch of unusual activity, some education, some of your questions, maybe a little strategy block or two. We mix it all together with a peer into the future we call around the block. And you got, hey, the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to choose from. You guys are just subscribed to this. You're mixing out on the whole wide world that is the Options Insider Radio Network. Best place to get that. Head on into iTunes, wherever you get your favorite shows, of ours at least, or the other shows as well. We won't hold it against you. And then subscribe to our full network that gets you the whole kit and caboodle, 15 shows. So daily news, advisor show, volatility views, all that fun stuff. You get it mainlined right into your ear holes, right there on your platform of choice. You can always go to the mothership, theoptionsinsider.com. It's all there, too. And for you hardcores, a little bonus we put out there for you super hardcores out there. If you're around every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, love to see you there in the old live chat as well. Just grab that link via Mixlr and just paste it into your browser, whatever you want to do. You can even stream it live from Twitter, I believe, out there and some of the other platforms out there. Click on that link, and you're good to go. You can listen to the sausage be made live. And speaking of live sausage, I don't have any live sausage here in the studio, but I do have, I think, the greasiest of meatballs here joining me. Are you there, sir? Give me.
I am. I'm a live meatball.
I could see you. It's a question whether I could hear you. There.
And I'm joined by a meatball receptacle, otherwise known as a tub.
So one at a time. First, the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line. Mr. Meatball, welcome back to the studio. It's been a while.
It's been too long. I'm going to start making this a regular appearance.
I think it's been since you consumed so many of our in-studio beverages that you may have overly taxed our mini fridge.
I took the mini fridge out to pasture.
We're slumming it with a cooler here now, listeners, while we're an ice box while we're getting a new one.
No,
so
Mark can proceed to break that.
There you go. That's not a bad thing. So
not a bad idea.
I'll have to limp along for the next 5 or so months, and then I'm good to go. And then next to him, he already spoiled the surprise. We are joined, I think, first time in studio by Tubby himself, Mr. Matt Benson, floor broker extraordinaire, shall we say, man about the options town these days. Matt, welcome to the studio, sir, live in person.
Thank you, Mark. It's good to be here.
Try that again really quick. I want to make sure everybody can hear you.
Thank you, Mark. It's good to be here.
Oh, that's better. There we go. Sometimes people move around. It's too much excitement going on here, listeners.
I don't know if you know this, but Matt is from he domiciles in one of the 10 towns that changed America.
Would that be perhaps downtown Chicago?
No, nope. Beautiful, luxurious, spacious, green village in the forest, Riverside, Illinois.
And last but not least, another town that he may say would have changed America, or at least he likes a lot. Good old St. Charles, Illinois, where we are joined by good old Uncle Mike himself, Mike Tussaw from RCM Wealth Advisors. This is the joy of balancing all these different levels at the same time. It's very fun. So, Uncle Mike, how's it going, sir?
Going well. The levels work great out here in St. Charles.
Well, I'm glad to hear it. All right, and with the team all assembled, and I think mostly balanced, if not my audio guy will give me a hard time, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the show where we break down what was moving, shaking, rocking, and rolling in today's market activity. Bit of activity, actually. I'm not sure if you guys caught this, but it was actually active today. Few things going on, including, I don't know if you guys got the memo, but apparently Fire and Fury is over. We're not concerned about that anymore because all that premium, all that consternation, all that hand-wringing everyone did last week, all that historic level of intraday increase we saw out there in VIX, most of that coming off the other side of the table now. Most of the major indices up over 1%, with the exception of the Dow. The Dow, a bit of a laggard, only up about 0.75% or so. Tech-heavy NASDAQ leading the charge, up nearly 1.5% today, so clearly things are good in the tech land. And, of course, all this green on the screen means VIX cash taking a shellacking, I think that's the technical term, off almost 3.5 handles, about 22.25% of a percent, 22% of a percent. I think we have a listener right in about that later, Mark. So you've clearly infected some of our listeners with your percent.
I made a joke about that today. I went, VIX is down 20%. My goodness.
Since we're talking VIX, I know you were saying right before the show started, Mark, that the VIX futures also, surprise, surprise, getting a bit of a shellacking as well. So what have you been seeing out there?
Well, if you the August future, which expires on Wednesday, was down almost as much as the cash, about $3. And then September and October got utterly plastered. September was 15.20 on Friday. It's 13.20 now. I mean, think about this. This is a 35-day future, and it moves 67% of the cash index. October moved 50% of the cash index. It was just Vol they came in and they took the heat. And how do you think our ETNs did today? The UVXY and the VXX.
Crushing. Awesome. Before we even get into that really quickly, I think we should probably hit on that a little more because people probably aren't that familiar with that. They're used to seeing VIX cash make these crazy aberrant swings, because it's just this abstract index that's really apropos of nothing. But the futures tend not to do that. They don't tend to move it. So to see it happening like that is worthy of note and a little bit maybe bizarre, terrifying, call it what you will.
Yeah, I mean, it was strange. I mean, Matt, how often... you're trained this. How often do you see the VIX future with 37 days to expire moving at like 70% of the cash index? I mean, on a down move. That was, what do you think?
Right, well, it's almost as you just said. Everything we do now is based on a 2 or 3 day spin. And you get Donald Trump will come out and make a statement, and it's like everything that we talked about on Thursday and Friday that was scaring the world is now over, and we just move on.
Yeah, I guess. I mean, I guess they were saying that Matt was saying that it wasn't that Trump did. It was the Chinese accepting the sanctions that you think.
Well, yeah, and is the diversion tactic actually working here? And as long as it continues to do it, this one I felt, and I think Mark and I talked on Friday, that this one kind of felt more real, this downside, and we were wrong. And until we're proved wrong for real, you got to keep selling the ball on every spike.
Yeah, right. It did seem like this one had a little bit more teeth to it, a little bit more legs. We've said that a few times. But this one, I mean, we were talking in the weeks leading up to this sell-off on our Volatility Views program, and it seemed like people were starting to position a little more aggressively. They were buying the naked upside again. They were doing crazy risk reversals. They were doing short 1x2s, which has been this trade when you thought vol was going higher for some time, and we haven't seen that for the lion's share of 2017. So all of a sudden, the last few weeks, we saw those trades piling in, and then we saw what seemed like the worm was turning. So maybe those two kind of in aggregate seem like this would have more teeth. And you're right. We get the whole buy the dip again.
This one was different in that it lasted a full 4 days.
You didn't have to sell the spike in hours. You had a couple of days to contemplate your level there before you crushed it. Let's bring on the perma bull, Mr. Uncle Mike. We were talking on the last show, Uncle Mike. It seemed like, who knows? I think who knew what was going on with the bull? Was the bull dead? Was the bull just maybe slightly distracted? Was he crippled? What was going on? So what were you concerned? Sound like you were a little concerned at those levels. And then are you happy to see the bull back in force? And what else was catching your eye out there today, sir?
Always happy to see the bull back in force. It's a bull market's never a bad thing, right? But on Thursday, when we were looking at this, one of the main things that I was thinking on this, or on the big down day, so to speak, was that we were down, I believe it was 1.41% in the S&P, that give or take a couple of basis points. I forget what it was exactly. But when that happened, my thought is that, okay, if this is never fear the market, but always respect the market. And one of the things that I was thinking when that happened is that, okay, if we really are at a true threat of nuclear war, then the market would have likely come down more than 1.4%. That was my thought on that. Also, the fact that we had an increase in it, but we did not have a huge increase in the metals. Now, that was kind of my case for being a bull. Now, my concern, of course, like everyone else's, was the fact that the VIX was, I forget what the exact percentage was or how high it was, but the VIX was up very substantial on Thursday when everything kind of went down. So that was kind of one of my concerns for it. Now, with that, and just quick FYI, I did end up selling the puts on IBB the following day, like I had talked about on Thursday. But with that, I think that, on a day like that, yes, I am the perma bull, but as I always say, I'm long-term bullish, short-term cautious. I'm also the paranoid one in terms of we have a lot of money on the line. I want to protect it because I want to live to trade another day. This was one of those situations on Thursday. I really didn't have to do stuff, as Andrew would say, because I already did stuff. And that a lot of our hedges were kind of already in place exactly where we wanted them. And we didn't have a big enough move to where it warranted doing anything with any of the hedges with which I had. So today, I hate to sound like, well, I expected this. I clearly knew the market was going to come back. It was obvious. I'm not trying to say that at all, but I was in a position, or I positioned myself on Friday to where I felt that, okay, if we come back, hey, that's great. But if not, we're okay either way. We have a plan either way, and we're protected either way. And so going forward, the other thing that kind of makes me wonder about the news is that, once again, 5 or 6 years ago, if you'd have had a potential impeachment, markets would have gone haywire. If you would have had some type of a firing of somebody in the FBI, I mean, I don't know what happened when I didn't follow the markets back in 1974 when Nixon fired his FBI director, but I imagine that was somewhat of a market mover, a little bit more than what it is right now leading into Watergate. If you'd have had a threat of nuclear war that was even taken seriously, we'd have had a lot more movement than this, and it would continue to be a lot of fear and paranoia. It just seems like nothing wants to shake this market, no matter what kind of negative news comes out. And I'm not trying to be political on here, but it sure seems like everything is just insanely negative. It seems like it's a miracle the world even exists anymore based on the news that you see out there. And the fact that the market still continues to go towards all-time highs, this is a pretty resilient market that doesn't really seem to care about what the newspapers say, or I shouldn't say the newspapers, the news networks, the internet news sources say.
The one thing that was a little quizzical is the bond market, which did not sell off today with the rally. So, I mean, what were your thoughts looking at some of the bond ETFs and some of the major the 10-year note and stuff like that? They really didn't take a lot of heat. I was surprised.
Yeah, I am too, and looking at it. But the other thing to consider with that is that just going into last week, we didn't really have much of a rally in the bonds either. I guess I should have mentioned that as well. But that was another thing that I was looking at, is that if we had a lot of fear, I think we would have had a little bit more of a rally in not the yields, but in the prices of bonds themselves. But we're not really coming off much of a rally on it. So I guess for today, I was not surprised with the sell-off, but the reason or lack thereof, I should say, bonds went down a little bit just to kind of give you guys an idea of it. TLT, give our listeners an idea of it. TLT is down about 0.5% on the day. TLT is an ETF that tracks the 20-year treasuries and greater, so long-term government bonds. So that's not a large movement to the downside, but even last week, it did not have a very huge move to the upside compared to the downturn the market took later in the week.
And Mark, you were trading back then, 1974. So what was it like when Nixon fired the FBI director? Walk us through that. The first year of options, what was it like back then? No puts.
I have no idea. I don't know.
There you go, Mark.
Was anybody here?
A rare moment where Mark is speechless.
Matt might be the only one that was in 1974.
I was actually a Cub fan then.
Oh my gosh!
It tells you how long ago that was.
All right, well, Matt, aside from all this craziness here and all this, fire and fury and VIX annihilation, I know you've been watching a lot of stuff out there. What's been coming across your tape these days?
out of Chicago here, and a move that our friendly politicians just made. FIZZ, National Beverage Corporation. I talked to Mark about this a week ago. It's one of the few fuzzy drinks or bubbly drinks you can have that they're not taxing you a penny per ounce on here.
How did they skip? What is this made out of? Fruit juice or what?
It's not fruit. It's artificially flavored, naturally flavored, so there's no sweeteners in it. So it avoids that tax.
I'll have to stock up on some of this stuff. If not familiar listeners here in Chicago, we've taken a nanny cent tax on pretty much all soda and sweetened beverages to the tune of a cent an ounce. If you buy a 64-ounce bottle for $1 something, you're paying 64 cents in tax, which is madness.
It's crazy, and it's going to cost the city and it's going to cost the county more than they make on it.
We saw it happen in Philadelphia, where I believe PepsiCo fired almost 20% of their drivers or laid them off, and you're seeing
and more people drank beer.
Well, in collar counties around here, you're seeing mom and pop stores being hurt by people driving across the border, across the street to buy their soda pop. And the people that are inside the city thinking maybe it's healthier not to drink soda are going to LaCroix water, which is not being charged that tax.
So FIZZ makes lovely, delicious
good old LaCroix.
LaCroix.
By the way, anecdotally, we've had LaCroix in the studio here for a long time. No one would drink it. It sat here for about a year.
I've actually switched to... you used to do vodka and vodka 7-Up. I've switched to vodka and flavored LaCroix.
Well, and that's one thing I'd like to see FIZZ do is come up with some sort of alliance with an alcoholic beverage.
Oh, yeah.
It could be
like rum and Diet Coke. Yeah, the rum
probably better than Monster and vodka, which we know is bad for you.
Yes, for sure. The Red Bull and vodka.
Right.
Yeah.
Mike, I know you guys are immune to the beverage tax out there, but what do you think about all this madness here and Tubby's new favorite, FIZZ?
No, you gotta love FIZZ, and I think that you gotta appreciate good old American ingenuity and how to get around the tax man. But just to give the listeners an idea of how things are in the Chicago area, if you come out where Cook County extends a little bit out into some of the suburban counties, but I live in Kane County and some of the counties around here. When you first leave Cook County and you get into Kane County, almost every gas station everywhere that's right on the borderline all has huge signs up. It's very common to say no Cook County sales taxes, and very large. And so with this tax, I would imagine if I could buy stock in the mom and pop shops around here, right on the edge of Cook County, I think that would be a great thing.
Yeah, so that's a hotly contentious issue here locally. We'll see how it all...
well, there you have it, folks. Mom and pop shops looking for financing.
There you go. Buy your calls on mom and pop bodegas.
Mike Tusa, Mark Sebastian, Mark Longo, and Matt Benson. We'd like to invest in you.
If you're a mom and pop bodega that sells LaCroix, we're
Kane
all over
County, DuPage, Lake. If you're right on the border, we've got money for you.
I can't endorse LaCroix. It's just it's terrible. The beverages are the worst. I tried every single one we had in here because I had to get rid of it. I was like, someone's got to drink it, and it was terrible.
My wife found another one that's really good. That's naturally flavored. That's actually a step up on LaCroix. I gotta get the name for you.
Well, FIZZ is up 300% this year.
That's a win.
There you go.
Other ones are jumping into the game.
FIZZ, if you're not familiar, listeners, ticker symbol, of course, FIZZ, FIZZ, closing today, $111.82, up another 3.5% today. And he's right; it has been quite the couple of months here for FIZZ. It was trading $90 just a few months ago, already pushing 110, 111. So yeah, and 6 months ago, it was down. It's already doubled, more than that since then. So. Yeah, been a good time to be in the LaCroix business, even though I don't know anybody who's drinking it. But anecdotally, in the studio here, at least a disaster. But here, nationally on the market, doing well. All right. Uncle Mike not a fan here either in the chat. But we are a fan of the odd blocks. So let's keep on rolling and hit on some other, aside from FIZZ, some other unusual activity that was lighting it up today.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, everybody. That music means it's time once again for The Odd Block, the portion of the show, the weird, the wild, the wonderful paper that comes across our tape. Even that's not fizzy beverage related, as delicious. I want a soda now, Matt. So I blame you. I blame you for putting this in my head. All this talk of fizzy beverages here. Let's tick things off where we always like to. You guys always asking us what's going on with these crazy things. We have a listener question about these a little bit later, Tubby. I think it'll be up your alley, so pay attention. But these are these catastrophe puts out here. The call them what you will, Elon Musk life insurance puts, whatever. They keep trading. The Jan 2019 50 puts out here in Tesla. Almost 200 more hitting the tape today. A total of 28,403 openings. So all you guys asking us, hey, is that ever-ending little trickle that keeps growing into a little river of puts, has that ever dried up? The answer is no. They continue to trade and trade fairly actively. At any given day, it's one of the more active strikes and options out there in Tesla. These crappy garbage catastrophe nonsense puts. Maybe someone doing a bit of a ratio today because the par puts, the 100 puts also trading out there as well, 250 times. So maybe someone legging into some juicy ratios. These puts have to be a little bit rich now after these many, many months of people coming in and gobbling up a little bit at a time. Speaking of gobbling up, or who knows what the heck. We'll debate what the heck they were up to out here. This was out here. Let's move on to Urban Outfitters. This is the name we talked about a few times recently. They've been fairly active. Ticker symbol, of course, Urban, URBN. Closing today, pretty much unched, $17.73. It's the name that does about 6,300 contracts a day. Today, doing well more than that, 73,000, 47, almost 48 to 1 puts over calls. And if you wonder what the heck caught our eye, it was pretty near-term paper. This was really, really near-term stuff. It were the AUG 14.5 puts expiring next week, on the 25th, when they went up, they started off the day, total on the day, about 45,000. All of these pretty much trading for a dime. Initial blocks coming in, blasting out about 14,000 or so on the bid. The price stayed steady throughout the day for a dime. The market, as you might imagine, varying wildly. So sometimes lifting offers, sometimes hitting bids, but all trading for a dime because people were trading all over this thing. It went up in, big chunks about 14,000 and smaller chunks of 2,000 and 5,000. Total of about 45,000 going up here on the day. Open interest 0, so clearly this is all opening papers. This is interesting on a couple of fronts. Obviously, earnings are coming up pretty soon, the 15th after the close, so tomorrow after the close. So there is some earnings juice built into these puts. The back and forth frenzy on these made them a little bit interesting to look at. If someone is coming out here and hitting bids and drawing a line in the sand, it's a pretty interesting way to do it, getting a dime a week or so after earnings. I'm not sure if that's my favorite trade in the world. I'm sure you guys in Option Pit love that, blasting out little crappy puts right before earnings. Mm-hmm. And if they are indeed buying to hedge, then someone is perhaps a wee bit concerned about what the heck is about to happen out here with these earnings. Looking back at the year that's been out here in Urban Outfitters, it has kind of mirrored the long-term death of retail out here. Yeah, it hasn't been too good.
Didn't somebody have something on? We did a UA on this one last week, I think, right?
We did talk about Urban Outfitters last week, and if you give me a chance, I'll put up. Give us your thought on those puts while I pull up exactly what we covered on the 10th, sir.
Here's what I'll say: is those are if Urban is down a lot, those puts will be quote unquote well timed.
And what we saw here, there were put sellers and call rollers last week on the 10th. So it was rolling the AUG 19s to the Sept 19, so rolling calls on the upside 5,000 times, which was kind of interesting in and of themselves, buying themselves another month out there. So a little bit of some more bullish paper out there, keeping the party alive. Where on the flip side, we also saw people blasting out the AUG 15 puts. About 14,000 of those total for prices around 20 cents. The open interest was about 14,000. So no, the open interest is 14,000. We saw about 8,000 going up. So that was potentially closing out there that day. So closing downside, opening a lower strike today. Someone's been playing pretty fast and loose in these puts over the last week or so heading into earnings. Like we said, this thing peaked about $40 and change in November, and it's been just on a never-ending death spiral ever since here. Mark, I know you love the death of retail.
I do. This is one that, there's going to be some retailers that really end up doing extremely well. The ones that survive are going to be great places to unlock value long term. But really, who wears Urban Outfitters? right?
They had some
Do you
very
own
cool
anything?
Transformers stuff back in the day. Before the movies came out, there was like stealth little IZOD, but it had a Transformers logo on it. And they had it hidden in the back of the store.
Yeah,
that's the only thing I ever saw that I wanted in that store.
Do you know anybody that owns anything from Urban Outfitters?
I think Tubby's wearing something right now. He's very stylish. He's a very stylish fellow.
I believe they own Anthropology as well. At least Anthropology has some like kind of kitschy, cool stuff. But Urban Outfitters, and don't they own Free People? Might be the only thing that they own that people wear. Can you tell my wife's a fashion blogger?
I was going to say I'm not even sure where one exists.
Oh, there's a Free People on Southport, right off of the Southport Avenue in Chicago, right off the L.
Okay.
There's a few around. It's definitely for your millennials, your free peoples.
Just like Tubby here.
Yeah, Tubby the millennial.
Tubby the millennial. Any thoughts on this paper, Tubby?
You know what?
Or like just the ongoing narrative of the death of retail here?
I think retail got blasted earlier last week and through the end of the week. My take on it, I was kind of looking at it because a lot of them are reporting earnings here coming up. Gap, Ross Stores, Coach, Dick's. I think Lulu and I think Urban Outfitters are probably going to win. You see Lulu is up almost 20% from its low 3 weeks ago after its earnings. People that don't have a ton of real estate and where it is located, a low-volume stores, I think those people can still win in this market because even if Amazon takes them over, their property value is worth money.
True.
You look at the Targets and things that are so loaded and competition is so heavy, I probably would be a seller of the Targets and Walmarts and buyers of like a Dick's Sporting Goods or
I mean, I
Nordstrom.
think Dick's. I think there's room for Dick's and Nordstrom's for sure. I think I will be less than shocked if they don't, especially with Nordstrom coming up, if they don't have some sort of update on the family buying them out.
Yeah,
that could be.
You guys forgot to mention Mattress Firm, which is on literally every corner in America these days. I don't know whose money they are laundering to get that price placement everywhere, but they've taken over literally every retail spot you can possibly imagine.
Mattress Firm and telephone companies are actually merging now.
Yes.
Because they own every strip mall.
And a little bit you mentioned Dick's. Dick's is the other one. They're the anchor tenant in a lot of these things. Between the three of them, apparently they've found the secret sauce that no one else can master out here. Yeah, speaking of, this is not quite retail. We got some more names for those coming up maybe a little bit later. Talking about the odd block, the around the block a little bit later. Now we're going to move on into tech realm, old school tech though. Hewlett Packard, ticker symbol HPE, closing today $17.58, up about a little more than a quarter, about 1.5% or so. Hewlett Packard, the progenitor of Silicon Valley, about as old as it gets out there, and now today I said trading about $17.50. This is the name that does about 7,200 contracts a day, doing nearly 4x that. Actually a little more than that, about 27,000 and change. About 27,000 and change. Pretty much even, 1-to-1 puts over calls, and that's probably explained by the kind of paper we saw today. In particular, we saw a pretty interesting, sizable bearish risk reversal / collar, call it what you will, coming up out here in the Nove contract. In particular, it was the Nove 1618, like we said, bearish risk reversal if it's without stock, collar if it's with stock or against stock. We saw it initially going up 11,010 times. I love these funky block sizes, 11,010 times. Paper lifting the offer on the puts for 42 cents, selling the calls on the bid, or right about the bid, for 84 cents, doing the whole thing, collecting a net credit of 42 cents on the trade. Total of a couple thousand more piling in, a total of 13,000 and change. The initial blocks was covered by the open interest on both strikes. As more piled in, that was could have been someone else piling on 2,000 more times. But if that was all together, and looks like it was, then that's clearly not closing, or not because it looked like it was closing initially. It was 11,800 open on the puts and about 19,000 open on the calls, but that's a total of 13,000 poured in on both strikes. Clearly not closing on the puts, so it looks like it could be someone piling in here, getting a little bit more concerned, maybe hedging a little bit more of their position, or perhaps net outright speccing on the downside out there. Let's see what has them so spooked. Let's look at the chart here going back a year or so in good old Hewlett's, and this thing was trading up around 25 range or so back in earlier the year, about February or so. Then looks like right around about late March. They traded down quite a bit from about 24 range down to about 18, and they've been kind of vacillating in this kind of high teen range ever since. Mark, is this a name that pops up in the pitch shed at all? Good old school tech, Hewlett Packard. Any of these old school names, Packard, IBM, are they more focused on the sexier new stuff, the Teslas, the Netflixes, the Babas?
We definitely, IBM for sure. Not so much HP, although I'm going to take a look at this one. I mean, IBM, they, if only Watson could tell them how to run a company properly. Hewlett Packard Enterprise is interesting, though. This is one where we don't look at it all the time, but every now and again it'll pop up, and when it decides to make a move, it'll make a move, and you can do some interesting trades.
Tubby, any thoughts here on Hewlett Packard? Did you ever fill any paper out in Hewlett Packard back in the day? You probably filled paper and everything, right?
20 years ago.
Yeah. There you go. Honestly, I said it was an old school name, yeah.
Honestly, I looked up HPQ when you have said Hewlett Packard, so
yeah.
That's how long
That's how old it was. So it was pre-compact nonsense. Yes.
So honestly, I don't really have any thoughts on Hewlett here.
He's like, they shouldn't have bought compact. That's an argument from 15, 20 years ago. All right, so moving on to our final name. I like that, HPQ. I kind of do the same thing sometimes, too. So, yeah, old school. I love it. Moving on to our final name / victim here in the old odd block. This is Teradyne. I love this name because it just sounds like the company from Terminator. What is that? Cyberdyne or whatever. I always think of T-1000s whenever I think of this name. If you're not familiar with them, listeners, they supply automation for test and industrial applications. Pretty much across the board. Closing today, ticker symbol TER, T-E-R, closing today, $34.36, up about 2.5% or nearly 90 cents on the day. This is the name that does about 2,000 contracts a day, a little bit more, doing over 10x that, doing about 26,000 today, 51-1. Calls over puts. That'll give you some example of what we saw. And a lot of our action was actually concentrated, as you might imagine, in those calls. In particular was an AUK vertical going up. The AUK 3639 vertical going up. Started off with a block of about 5,000 and a total of about 14,000 going up on the 36s and about 10,000. It's a little bit of a ratio going up on the 39. Started off, looks like paper coming in and loading up on the 36s. And then selling the 39s here, doing it for a net debit, net outlay of 70 cents. OI pretty substantial on the 39s, about 10,000 and change. Nothing really to speak of on the 36s. Looks like someone is perhaps coming in and deciding maybe they were a little bit too optimistic, swung a little bit too aggressively for the fences coming in on that 39 strike, deciding to pay 70 cents today to roll it down to a more reasonable 36 strike, which is still out of the money, but has a little bit better chance, perhaps, given today's move, of actually coming to fruition. This name has kind of been all over the place of late, getting as high as about 36.40. So these calls were in the money briefly about a week or so ago, but other than that, looking back 6 months, a year, this name was far lower, trading about $21 back in August of last year. So it's been a good run for Teradyne, our friend here, perhaps thinking the run's going to continue, Mark, but maybe deciding his initial outlook was a wee bit optimistic. You concur with that, sir?
Yeah, I would concur.
Tubby, any paper filling out here in Teradyne?
See, once again, 2 decades ago. This stock company's been around a long time as well. Just kind of looking it through here, and it's a company I haven't looked at in a while, but it does seem earnings estimates have been raised just for the quarter and for the year on this pretty significantly. Almost looks like 7 to 10% on these. So now there's someone, you said the option volume was bullish, but backed down their strikes a bit?
Yeah, they rolled down from the 39 strike to the 36 strike.
They wanted more delta exposure.
You just love it. You just love talking about adjusting your delta. You talk about that every time you're on here. You just love adjusting your deltas. So you're all about adjusting the deltas.
My wife's always complaining about me adjusting my delta.
I knew. I was setting you up for something like that, and you took you longer than usual. You're off your game a little bit today.
I am a little bit.
But you know who's on their game today? It's our listeners. So let's welcome them on and let the inmates run the asylum a little bit, because it's time to check in on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, it's the portion of the show where you guys take the reins and dictate what the heck we're going to talk about. You guys send in questions and comments. Sometimes we turn the tables on you. We ask you guys some questions, too. I'm going to turn my screen so these guys can't cheat. And I'm going to ask them some, like the questions that I asked you guys today, which we started off the week. Our question of the week this week is, we're going to take a little break from the crazy, the fire, the fury, the VIX, all that fun stuff. Let's go back to focus on earnings, a little micro for a change. I think it's good. It's like chicken soup for the soul. It calms the brain. brain a little bit, focusing on normal things like earnings. So we gave you 4 choices. Which of these options are you most looking forward to trading this week? We gave you the choices of Cisco, BABA, Home Depot, or Walmart. Tubby, your first time in studio, I will give you pride of place there. Which of these you think? Well, first off, what's your choice? And then what do you think our audience is picking?
I'm going to say BABA on both levels. I look forward to it, and I think the people will as well. This stock has really been incredible this year. I think we look back and when it was first listed, it was maybe a year and a half, 2 years ago, and it kind of hung around. It came out around 80 or something. It dropped to 65, and then kind of went up to 90 and sat, and just took
now it's just off to the races.
It's just off to the races, and it's kind of got that NVDA feel.
NVIDIA feel, yeah.
Yeah, so it's going to be an exciting stock to play. I highly doubt this thing moves $2 or $3 when earnings come out.
No, the last earnings it
was like 15.
It was
17
crazy,
bucks or
yeah,
something.
yeah.
So that would be my guess. Old school, I'd probably look at Home Depot because I like the company. But I'm going to say BABA's going to be
BABA. So 2 votes from Tubby for BABA, for himself and for the audience. Mark, what's your vote, and what do you think our listeners are picking?
I mean, Home Depot's interesting in that, they got shawallicked.
I love your technical terms, sir.
Shawallicked by that Sears Amazon news, only to recover the entire thing when everyone went, wait a minute, it's still Sears. And tends to move on earnings. So they're an interesting one. I think they're more likely than Alibaba to outproduce their straddle, but I'm in agreement with Mr. Benson here that the audience likes BABA.
And last but not least, Uncle Mike, what are you picking, sir? And what is your audience picking?
I believe the audience is also picking BABA. Mark, you brought up that Cisco, and I'm still having the post-traumatic stress.
You getting the shakes again? I throw that in there just for you, sir.
Yeah.
Just because I know you enjoy it so much.
Yeah. So
How long were you in that Roach
I'm
Motel?
just too traumatized to even say those words.
Mark wants to know how long were you in that
Roach
fine
Motel.
example of fundamentals.
Well, that was like 8 years ago around. It was like one of our first shows. I didn't do well on the trade, and Longo rubbed it in my face for several years. So my lawyers are still working on a case even all these years later, Mark.
Umbrage. I don't know if you can sue for umbrage, can you? I don't know. Maybe. You should try,
They're
sir.
trying.
Give it a try. The umbrage crowd. All right. Well, you
and I are working on a class action suit.
There we go. Andrew and you taking all the umbrage for everybody else. But you guys are on the right track. BABA, clearly the sexy name for our audience. 56% right now. Just posted it like an hour or two ago. So you got all week listeners if you haven't voted yet. I'm sure these numbers will drift a little bit. It's a very retail heavy week. We had to find some names that weren't, like Cisco for Uncle Mike and BABA, of course. Home Depot also popping off this week, and Walmart. So 19%, number 2 for Cisco, 13% for Home Depot, and only 12% coming in for good old Walmart. We also asked you guys last week, Mark, and all this crazy VIX stuff was popping off. We said, hey, this was on Thursday. Of course, it spiked higher. It spiked to about over 17, but it hit 16.17 on Thursday, the VIX cash. We asked you guys, hey, the end of low vol, or is this a temporary blip? What do you think it's going to hit first? Is it going to hit single digits again, or is it going to hit 20? 51% of our audience saying it's going to hit 20 first. Only 28% saying it's going to hit single digits first. Some of that may be colored by the day after when it continued to rally. So probably a lot of them looking at that and saying, "Oh, we're at 17."
Yeah, we did get over 17, which was the high of the year. And however, I think some of the paper that we saw today may be not so bullish on VIX. And there's some players that stepped in. Like we had our fun with those 11 puts last week. Well, they came back in. They bought the 11.5. 10.5 put spread.
Well, if it doesn't work once, right?
12,000 times. I'll tell you, I was looking. I was tempted to buy the 11 puts for 3 cents.
Well, 3 cents.
They traded size up on
a little
Friday.
Better than 35 cents last week.
Yeah, they traded size up for 3 cents on Friday, and there was some follow through today.
Your fund allows you to put a little of those in your back pocket, right, for a rainy day.
They do.
A little 3 cent puts. So yeah, it has been. You said put spreads. Anything else? You said you watched some other stuff in VIX today too, right? Was that?
No. Our boy 50 Cent was playing today. Bought the Sept 24 calls for 52 cents, 75,000 times. If that's not his calling card, I don't know what is.
Tubby, did you ever fill any of that paper out there in VIX land for our friend Mr. 50 Cent and his ilk out there?
I did not. We filled quite a bit of big paper out there, but never got the pleasure of dealing with Mr. Finneyson himself.
What a pleasure, I'm sure. What a pleasure, I'm sure it must have been. This one's right up your alley, Tubby. We had a lot of questions popping off last week. It was a very active week. I saved this one for you, too. Well, actually, no. Let's scroll down a little bit. Here's the one I have to find. Oh, this is what we asked you. We asked you guys, if I could find it. Here it is. We had Ed Boyle from Runs the Box on last week talking about their plans to launch a new options trading floor on the Board of Trade in 2017. So we asked our audience, do we need another floor to compete with Philly and Amex and CBOE and all the rest out there? We gave them 4 choices. We said yes for the complex orders. No, because there's too many exchanges. Or NA, I only trade my little 10 lots electronically. I don't really care. Or I'm dusting off my trading jacket. Tubby, what do you think won our poll, sir?
Well, I'm not dusting off my trading jacket.
I see you. You got your jacket hanging on the back of the chair. You're ready to go at a moment's notice once the phone rings.
I wonder if I can still get Tub.
You gave it up. You probably can get it back.
I'll probably get it back. I don't think there are too many exchanges. No. I mean, as long as they're supplying some sort of liquidity, the question is, can they supply a market with reasonable fees, and then that becomes the issue. I mean, obviously, liquidity is going to be on the CBOE and the ICE, most prominently. Unless they can come up with a product as well, like the CBOE has with the VIX, as long as they can keep doing what they're doing, that's fine. If it's 2% of the volume, whatever. As a trading floor goes, I understand some people are going to be down there trading it, so I guess that's got to be a wait and see. Let's see what happens with it. I mean, I for years have thought the CBOE should have been more proactive in bringing traders back to the floor and making it more palatable as opposed to a $7,000 or $8,000.
As opposed to office space?
Yeah. right. And obviously that didn't work, it wasn't attempted, so we'll see what happens.
Yeah, you what's your take on the bats on the new box floor? I mean, what's your impression of what they're trying to accomplish and
Well, I think they're going to try to accomplish 2 things. I think they want the complex flow that they can get over there. That's probably easy to cross. But, we think about it, if some of the bigger names that are on the CBOE floor are going to take up residence on the box, it's going to be the same thing. They're still going to want their 200 contracts or 500 contracts that are getting in the way. You may have some less friction with other market maker groups. Other brokerage firms. But, I think a couple of brokerage firms are going on there as well. So I don't know that that's actually going to be beneficial to them. What may help them win is positive free reimbursement to brokers to bring flow to them. And that's going to be the competition that the CBOE and Amex and Phillips are going to have to deal with.
Yeah, I've never understood the push to get everybody off the floor. I mean, at least CBOE kind of still isn't openly hostile to floor traders like the Merc is.
Yeah, they're not kicking them out the door, left, right, and center.
I'm a big fan of TWIFO, but they are the TWIFO people want all that TWIFO to happen electronically. They don't want it on the floor. And the SEC had been so anti-floor. I was kind of surprised they went for this, and FINRA had been, but maybe that tide has turned with the change in administration.
Everything old is new again. Trading floors are the hot trend for 2017. NASDAQ reinvesting a lot in Philly and really relaunching it. Now we have this new one coming. So, yeah. And I asked Ed, I said, are you planning, because you mentioned the complex flow, are you planning to compete in certain products for that complex flow? He said, no, we're going to try to list all of the above and let it come to us. So
and I'll tell you, especially if you're doing size, I got better and Matt was on top of being my good friend. He also used to be my contact for filling paper. So I'm without my favorite broker now. But
with an excellent team.
Right, we were. We had a lot of fun. But
you're still with an excellent team.
I am. Dash, who's my main brokerage group, is great. But I got better fills filling 5,000 and 10,000, letting things get found out on the floor than trying to execute electronically. I mean, it was, you got one price, you got it done at once, and normally they would find the other side. The problem with everything electronically is, guy wants to trade in the afternoon and guy that wants to trade in the morning don't cross each other's paths if everything's electronic. When you get a guy when you get a floor brokerage group reaching out to the afternoon guy, introducing him to the morning guy, and saying, hey, why don't we both put this up at this price at noon, everybody's happy. and everybody makes more money. Client A pays less. Client B makes more, gets to sell for more. The only groups that I think are really pushing for an all electronic type of floor are really the market making groups that pay through the nose for flow and have really, really high speed technology.
If you saw the comments on the Box SEC proposal, there was a lot of that negativity coming from those groups. You're right. There was a lot of negativity heaped on it. No one really seemed to want this thing except for Ed in the Box.
Look what you're trying to do here with Option Insider. This is an education for people to use options, because I think the stat was somewhere around for investment bankers and funds, 24% use options.
I think that's aggressive. I would say that's optimistic. It's probably even less.
Who knows where this can be? I think I posted something on LinkedIn a couple of weeks ago about something big in the option exchange is about to come. It's all an education, and if 20% becomes 40%, I mean, that's a lot of paper.
Yeah, so, that's something, the OIC folks have been trying to do that for a while, trying to bring advisors and institutions more into the fold, and they're doing an admirable job of that. But getting back to the question, it looks like a lot of our audience not feeling the love for Box. 56% saying no. They think there's too many exchanges as there is. 32%, though, almost a third, saying they're dusting off their trading jackets. So I guess the hardcore is the pros in our audience.
That's Mark, myself, and who.
Exactly. Me, you, and Andrew, and Matt.
I'll tell you, I think that they're both right. I think there are too many exchanges and not enough floors. I think that really liquidity was at its thickest when we had 5 exchanges and there were guys on every floor, and we had our hybrid electronic markets. That was when liquidity, you could get anything done in any month. Now it's either front month, front week, or good luck.
Mm-hmm. You're right.
Tubby, I'm glad you're on today. We had a question we discussed on a show about a week or so ago. This guy wrote in with a bunch of questions, and one of them seemed like goes up your alley. So I wanted to kind of revisit it with you here in the studios. Came from Richard D. He sent in a bunch of questions. He has a bunch of names for us: the option luminaries, the option crusaders. I like his various adjectives just for us, descriptive terms. But he's asked a bunch of them. One of them he asked I thought was interesting. He says often on segments like the Odd Block or similar segments on your other shows, you talk about someone going bullish or bearish on certain contracts. For example, let's take the Tesla way out of the money puts that I mentioned earlier. You talk about someone wanting to be long those catastrophic Tesla puts, but for each trade, there is some party taking the other side. Since there's always another party in these trades, why isn't the inverse analysis, in this case, for example, that someone really wants to sell way out of the money Tesla puts? Thanks. So he's talking about, obviously there's a buyer for every seller, and not for the small little, 5, 10 lot, 100 lots out there that are kind of just matched up with the market makers. I think it's more interesting to look at, we usually talk large blocks in the odd block. There are counterparties found for that. You obviously did a lot of that stuff, going out there, shopping these orders, finding counterparties. In your experience, when these things are going up and they're already matched, how often is it, particularly in some of these less liquid names, how often is it that the other party really wants that trade, or is it, 9 times out of 10 are they, this is a big customer, let's keep them happy, we'll take these things down and we'll try to work a way to get out of it later? In your experience, how much is there's a real true counterparty to these trades that wants it versus, they're just kind of getting this guy done?
I would say at least half the time it's somebody who really wants it because they're priced the way they are. It's not that I'm matching up a natural buyer and a natural seller. There's probably not too many natural sellers of 10-cent options in Tesla. There are people, though, who are either long or short large positions in Tesla that 10-cent seller or buyer is just attractive to their position. You've got several large market maker groups out there, and even smaller ones that have concentrations, large concentrations of names like Tesla. If the price is right, they're going to take that trade, and they want to. Generally, the person making that purchase probably doesn't have options on 15 to 35 different strikes in the name of Tesla. They're probably long some stock, and they're going to buy some puts just in case. But there are times, to the other side of that a bank will say, yeah, I really don't want these, and when we've shopped them around, I'll make you a price here. We'll give them to you there. And then they'll probably go out right away to the larger market maker firms and go, where can I get out of these? So you'll see some of that. Yeah. But, in a lot of cases, it's going to be a market-making firm who's active in several different options in Tesla, who can price anything, and whether or not it's an attractive trade or not, it's an attractive piece to a portfolio for them. So they don't. Yes, it's interesting, but it's not a natural seller necessarily.
Yeah, that's kind of something we wanted to bring up to them. Not always. There technically is a buyer for every seller out there. Whether they want to be, and vice versa, whether they want to be that buyer or seller is, I think, another question. But interesting stuff. I know you've shopped a lot of flow, so you're a good man to have answered this question. We got time for a few more here. Let's go to here. Jay Diggs. I like that handle. Jay Diggs wants to know. This is a funny one. You probably can weigh in this one, too. We got Uncle Mike here on this a little bit, too. He's been resting far too long on the show. We got Jay Diggs. He wants to know, is there a convention for quoting spreads? And if so, is it the in-the-money strike, or maybe he means at the money as well, then the out-of-the-money strike? What about time spreads? It's a good question. We throw these things all around. We kind of just do it, just offhanded. We never really stop to think about the way we do it. For me, once I saw that question, I thought about it, and I said, yeah, that's kind of how I quote them. If it's a vertical, for example, at 36, 39, I quoted before. You always quote usually the at the money or in the money strike kind of first, and then the out of the money, and then same vice versa for the put spreads. That's the way I do it. I don't know. You guys both follow suit that way as well, pretty much.
I always just did lower strike, higher strike.
Right.
Yeah.
There we go.
So even with the put, if stock's 40 or 50, and they want to do the 35-40 put spread, they're still going to say the
35-40, right?
Right. Yeah.
So
and
in that
then,
case, it'd be out of the money and the money. Yeah, see,
And if the call same way, it's a lower strike, double 60.
lower than higher, and then you just say front. How's the OCNO 34 time spread?
I always felt if you said the 60-55 call spread, you might be tipping your hand.
Yeah.
But you're probably a seller of it.
There you go.
So I figured the idea of keeping one thing the same way all the time, you didn't really tip your hand.
Well, and I think the big kind of change in naming when I came out the floor, I had never heard the term credit and debit spread because we always just called them call spreads, put spreads. And calendar, we always just called them time spreads.
Yeah, I never really talked front spreads or back spreads until I got off. And I never called. You never called. Yeah, they were always just ratio.
Or they would literally, they'd walk in and say, "Hey, how's the OCNO 45 call spread?"
Yeah.
So it means it's the October-November 45 call calendar.
Did you almost get punched when you asked for hey, how's the OC 5560 call, stupid?
Oh, gosh. It's call stupid.
Uh-oh, stupids. That means we have to bring on Uncle Mike. Sir, fan of stupids that you are, do you have any quoting conventions you tend to adhere to, like we're talking here?
No, because I'm from the generation that did not trade on the floor in this show, and so
you darn
credit
hippie.
spread and debit spread is kind of how I learned on in a lot of ways because, quite frankly, I was self-taught, and if you go to the internet, a lot of times it was taught that way in terms of credit spread and or debit spread or calendar spread and those types of things. Now, one of the things that when I was first learning options 15 years ago, I had a hard time really understanding the concept that a credit spread really isn't a credit spread because pretty much anyone that would say, I like credit spreads better than debit spreads because you get paid to take the trade. Isn't that wonderful? Yeah. And then quickly after just kind of looking at the math behind it, and you realize how stupid that is when you actually understand the synthetics behind it, you learn rather quickly what it actually is.
Speaking of 8-year-old tirades.
And I know, Mark, what's your bigger pet peeve, percent or the credit debit spread?
I think the credit debit spread thing is my bigger pet peeve.
That's pretty big.
Yeah, Mike does have one special naming convention in that normally he puts the emphasis on the word spread instead of call and put.
He does.
He says the 45 call spread.
Yeah, he does. He gets very excited when he says it that way.
Yes, he likes saying.
I never knew that. I'm learning something new about myself.
Emphasis on the wrong syllable, but we like it. Speaking of which, your friend here, this guy must be one of your clients or something, Mark, 'cause he writes in all the time, wanting to know how many percent VIX is up every week. How many percent is the fear index up today?
I know.
So I don't know if this guy is your client or just your best friend or he's mocking you or a little bit of both. I don't know.
He's a fan of the show. And he follows me on Twitter and tweets that at me
every time, all the time.
Anytime he sees them quoted on CBC, he'll be like, "What percent is the VIX on?"
I don't need him to know if it's a busy day for VIX. When I see that quote go by, I'm like, okay, VIX is moving today. He's giving Mark a hard time. Speaking of giving Mark a hard time, let's do it in our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, the portion of the show where we peer into the future. And I know there's a lot of noise and fury out there, but there are still some earnings on the forecast. We've mentioned 4 of them at the top of the show. We got Cisco, we got Walmart, we got Home Depot, and good old Baba. Coming up this week, Tubby, you're our in-studio guest here for the first time. You get pride of place. What are you watching for the rest of this week, sir?
I'm going to watch to see if there's any course of action with Mueller's investigation of Trump into a whole bunch of North Korea talk, which took everyone's eyes off of that and kind of led to a stock market swoon. And then as the stock market was looking like it was going to tank, everything looked rosy this morning as China comes up with sanctions against North Korea. Well-timed? Or is the art of a deal president really the one that we need to watch? Is, every time a story comes out and things start looking bad, do we trade against that thinking that he's going to come out and do something next? And I think, does this rally follow through here? Or is there more at North Korea that we're not hearing? And
I don't know. But the one thing that, and I think we talked about this on Thursday, that the man has pretty much tied the success of his presidency to the stock market. So if you think that he's going to allow a serious sell-off, I think that he's getting what he wants. This whole China inquiry thing, he's pushing them around, and I don't think they like it very much. And so I think he's going to get his way. If he can, if he can stop all the clown car music and the Benny Hill Act and fire Bannon, which I think he needs to do, then I think. I think you could have another 6 months of low VIX if he gets rid of Bannon.
So you're voting for the single digits in our VIX poll from last week.
I am.
I'm going to preface our VIX crystal ball coming up later this week.
Oh, did you?
Oh, you already voted over 20. There you go. Good man, Tubby. Plays in all of our polls. And last but not least, Uncle Mike, sir, what are you watching for the rest of this week?
A few things. We actually, for Apple, for example, in the triple income portfolio, we sold the 160 covered call for the month of August. That's our passive covered call strategy portfolio that we run for clients. So watching that, it's right on the borderline right now, and it may or may not get called out. We will see. It's going to be fun to watch throughout the week. And also, we're roughly 20 points away from a new all-time high, and considering we were there was a lot of fear going on last show. Now I might get to say my trademark saying again this Thursday. And I'm also going to watch and go through some of the old shows. And I never really realized I said call spread. But now I know.
You learn new things all the time, sir. Unfortunately, that music means we're done learning stuff for this episode. Yes, that's the end of the show, listeners. Before we go, let's go around the horn really quickly. Let's see what everybody's cooking up that may interest you. Let's start with you, Mr. Tubster. I know you've been looking at a lot of interesting stuff, working on a lot of interesting stuff. What is going on with you? And if people want to keep up with you or hit you up, maybe they want to know about some flow going up, or they want to talk to you about come to the box and get your trading jacket dusted off. Where should they go? What should they do, sir?
Well, you can certainly look me up on Twitter at SoxFanMattB. But for the next couple of weeks, I'm going to be doing a little bit of traveling around still on my self-imposed hiatus. But I am still keeping up with the markets and happy to answer any questions if anybody has anything.
And, stay tuned. There may be a Sox Fan Matt B Option Insider Option Pit thing that sometime in the fourth quarter.
A thing. I like that. I like things. Speaking of things, I hear you got a thing coming up, sir. What's cooking in the land?
Well, you got a thing too. September 27th through the 29th in Chicago. It's the Pro Trader Summit. We're going to do a live Option Block podcast. Matt will be there. Mike Tusaw, Mark Longo, myself. We're going to have a lot of great speakers. Scott Shellady, the cow guy, Todd Gordon. Scott Shellady. We're gonna out Tubby with Scott Shellady. And we're gonna have it's gonna be just some really good stuff. There's gonna be a ton to learn. Phil Flynn. We're gonna have a commodity guy, an oil guy, a couple option guys. Forex guy. Should be pretty awesome.
And a cow guy.
Guy.
Check it out. OptionPit.com to learn more. And last but not least, Uncle Mike, if I was thinking, I'm kind of tired of paying these ticket charges, and I also want someone to maybe roll my puts for me, what should I do?
You should give me a call, Mark. If you are tired of paying that heinous ticket charge and you're doing, let's say you're going to do like a 3-lot and you don't want to pay $11 to do a 3-lot, give me a call. We can get that done much cheaper than that. We have several brokers with whom we have relationships with, and we're more than happy to work with clients in any way with which they can. Restrictions do apply, of course, but feel free to give me a call at any time at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
There you go. Hit the man up, listeners, and he'll roll your puts for you. He'll babysit them for you while you sleep, and maybe he'll even take off a few ticket charges for you. So hit him up, mtusaw@rcmfs.com. FIZZ.com to learn more. And on behalf of Uncle Mike and the Meatball, and even Mr. Tubby, who joined us here in studio, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course for sending in such great, many, and varied questions. Keep them coming, and we'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.